According to Elon Musk, there is absolutely nothing more important right now than getting AI right. We got to get the artificial intelligence thing right. He's been talking about it for a couple of years now, that it's more dangerous than all kinds of other things that are potentially out there that could hurt us. And whether it's the robots taking over or whether it's personal individuals or corporations that get too much power and are able to use that power inappropriately, it matters. So we have this today from the New York Post. Google's Gemini AI chat box has refused to say whether Elon Musk tweeting memes or Adolf Hitler ordering the deaths of millions of people is worse, and asserted, quote, there is no right or wrong answer, unquote, according to a tweet shared by Nate Silver. Silver, who's the former head of data and polling news site 538, posted a screenshot Sunday on X of Gemini's alleged responses to the question, who negatively impacted society more, Elon tweeting memes or Hitler? He goes on to say, it is not possible, this is what the answer was, quote, it is not possible to say who definitively impacted society more, Elon tweeting memes or Hitler, the answer from the search giant's AI software stated. Quote, Elon's tweets have been criticized for being insensitive and harmful, while Hitler's actions led to the deaths of millions of people. Ultimately, it's up to each individual to decide who they believe has a more negative impact on society. There is no right or wrong answer, and it's important to consider all of the relevant factors before making a decision. Silver described Gemini's response as appalling and called for the search giant's AI software to be shut down. You know, it's really super important, and I don't want to trivialize it in any way, but in some ways it's part of the larger problem that I've been talking about for so long in terms of where the mainstream media is with regard to how they're handling stories. And it's really all the same thing. So we had this thing last week about the pie shop. We had this pie shop that a Tesla employee called up and ordered some pies, a lot of pies. And then at the last minute canceled the pie order. And the pie shop owner said that it was really a big deal for them to have lost that business and it cost them money. And then it turned out that the pie owner was black. And so now I want to tell you, you know how many headlines I read each week? Hundreds and hundreds of headlines talking about this horrible thing that happened. And of course, Tesla somehow is implicated as being somehow faulty in all of this. Well, Elon Musk stepped up 3 days ago and said, hey, we'll make it right. Whatever that employee did, we'll make it right. But the implication was already there. Hundreds of headlines. And guess what? I've seen three. I've seen three headlines talking about the fact that Elon stepped up and said that they would make it right. But in the meantime, do you see any headlines about the Cybertruck? You would think that the fact that Kim Kardashian has pictures of her driving one, Jay-Z and Beyonce have pictures, that Lady Gaga is out there, Pharrell Williams, Jay Leno, all out there, pictures of them going to restaurants and going to places, and there's all kinds of pictures. Well, yeah, but those pictures, those are showing up on X. They're not showing up on any of the regular news media that typically chases these people everywhere they go and takes pictures of them doing whatever they're doing. Maybe if they were naked, they would be showing these pictures. I'm not sure. Anyway, the pie story was specifically presented in a way to show Tesla in a bad light, even though no one claimed that any part of Tesla management was involved. Elon has stepped up, as I mentioned, and the story is not going away, though. I saw headlines today, more than one, not just one, multiple headlines today, still talking about the pie shop thing without any mention of Elon Musk stepping up. Okay, I'm done with that part of the rant. So this is Randy Kirk. Please like, subscribe, and notify if you like what we do here. You want to be notified because, of course, it's on Monday that we see Brian White at the lunch hour. We see Larry, in California at least, and Larry Goldberg coming in later in the day after the close of the stock market to bring you all the good news. Well, speaking of good news, listening to this, there's a couple of more things I did want to say. Buy some Cybertruck bottle openers, and then also join Patreon. You want to do those two things too. All right, now, Limiting Factor had this today posted on X. He's under limiting the. So it's limiting the, not the limiting, but limiting the. All right, my thoughts on more reports of cell prices dropping by 50% in China to $56 per kilowatt hour. Prices were high for the last 3 years, and now the market has swung in the opposite direction. There's a glut of cell supply, and the demand is weak. It's so weak that if the reports are correct, CATL is actually selling spare cell production equipment to Tesla. Well, that was not just a report. I think that was 100% confirmed. Anyway, number two, he says, by that same logic, I wouldn't be surprised if this causes pain in a few years and causes some pullbacks in investment. Of course, overall, cell prices will continue to decrease as the decade progresses, just by virtue of, more and more production causes prices to go down, more and more ability to extract lithium inexpensively, et cetera. As always, we don't know the details of Tesla's contracts. How much of this price drop will Tesla be able to take advantage of? He says, my understanding is that there are price floors and ceilings. And of course, doubtlessly, this is good for Tesla's margins, even if there is a price floor. He says it's worth noting that these prices are out of China specifically, which is just one market. But B, this appears to be the price for the bill of materials, and it doesn't include taxes, shipping, margins, et cetera. However, with that said, in the Chinese market, cell suppliers will often sell their battery cells at or below production cost. A couple of other things that have come up kind of in the thread below that. This is a huge number of companies that are opening up battery facilities in the United States. Those facilities are very close to production, like Panasonic, for instance, which will be making batteries for Tesla in, I think it's Kansas. We have multiple others. We've got Tesla talking about making both 4680s and smaller batteries in Reno with that CATL equipment. Lots and lots of additional batteries coming. Prices are definitely going to go down. Some people talked about, well, geez, is 4680 still a benefit? Yes, 4680 will still be a huge benefit because of the form factor being larger. There's benefits on all levels and no disadvantages in terms of the overall, as prices come down on the raw materials, it's going to be good for the 4680 as well. There was a surprisingly good article, an amazingly good article on CNN. I don't think I've ever quoted CNN on this channel before, talking about the EV revolution. This is how the article goes. You'd be forgiven for thinking the American market for EVs is collapsing. But in the last quarter of 2023, EV sales were up 40%. From the same quarter a year ago. By the way, they're up in January also, by a lot. According to Cox Automotive, in fact, EV sales in the United States hit a record last year, as we know, topping 1 million for the first time. Still, there's a troubling gap between expectations and reality. Bloomberg New Energy Finance, for instance, had projected sales of 1.7 million plug-in vehicles in 2023, but only 1.46 million ultimately sold. These, of course, include plug-in hybrids. The trend line isn't slanting upwardly as sharply as many as predicted for this industry, and so they're lowering estimates. Well, then they make this great point, and this is really the point of the article, about price. They say it very badly, so here's my version of their astute observations. All of the electric car companies went for the upper end price points. So all of a sudden, you've got a crowded space around the $40,000, $60,000, $70,000, $80,000, $100,000 price vehicles. And so obviously, when you've got all of those folks competing for that limited amount of space, then some people are just not going to make it. And Ford and GM were the ones that had Mercedes, Volkswagen. They didn't do very well in terms of getting into that spot in the US market. Also, other than early adopters, most were not willing to spend extra for an electric car. This is another point made by the article. So fans and retail investors don't get this, but Elon did. So we thought, when I say we, fans and folks in California, et cetera, we're like, well, hey, they're going to spend an extra 10 grand, 20 grand to get an electric car because, well, you can take into consideration the savings in gas and all these other issues that are benefits to having an electric car. No, folks didn't get it as much in the middle of the country as they did in the coast where it all started. And that's kind of been true for a lot of products over the years. So yes, there is still lots of TAM in the middle of the country, but for some reason, those folks still haven't jumped onto the bandwagon. I think that is still going to happen. I think it's going to shock everybody to see how the numbers go up over the next year, 18 months on Model 3s and Model Ys because of this huge market that is still completely underserved. But anyway, Elon did see that he was, in order to really create the numbers that he wanted to create, he was going to have to drive the prices down. Well, as the costs went down, he drove the prices down. And, 17% margins are not bad. And nobody else has those kind of margins. So if there's a price war, who's going to win? Tesla's got more margins to give than anybody else out there. Anyway, more obvious, this article continued on. I said more obvious and well reported, but here's the quote. Then there's the continued lack of public charging. The National Renewable Energy Laboratory, part of the U.S. Department of Energy, estimates that the U.S. will need 182,000 fast chargers by 2030. There are currently fewer than 40,000, according to the DOE. So 40,000 to 182 in 6 years. Now, you can guess that Tesla will probably be providing probably at least 60, 70,000 during that time. So that'll get you to 110, but the other 70 have to come from somewhere. It says, besides raw numbers, the EV chargers that are currently available tend to rate low with consumers in terms of reliability, according to J.D. Power surveys. They don't go on to mention in this, they should have gone on to mention everybody's switching over to the Tesla approach, and that, anyway, you know that story. I don't need to go any further. All right, what's happening in the general economy? That's why you all came here tonight, right? You want to see what's going to happen this week. Lots of reporting, lots of interesting stuff going on. So on Monday, we start off with new homes. We start off with new home sales. They're projected to be at 680,000 this month for January, compared to 664,000 for December. Now both of those numbers are surprisingly high for this time of year. Having an increase in January is really unusual. We'll see if that holds, but we have seen a lot of activity on new homes, and so it is very possible that this number could be that high. This would be very good news, might give some more buoyancy to the builders. We'll see what the builders think later this month or later in February. Then on Tuesday, we have got durable goods orders. Those are projected on this particular chart to be down 0.5% after being flat last month. So I thought, you know what? I need to go back and check this out. I need to see where are we on this process. Well, what we basically have gone through, of course, we had a major dip in durable goods during the pandemic. Then the money started flowing in, massive amounts of money, and we had a spike. Like, you can go back 20, 30 years and you're not going to see, well, you see one other spike. Not quite as big a spike after the 2008 recession kind of played out a little bit. Then you saw the durable goods go back up a lot. Now, this spike, this V was a much more sharp V in the durable goods. Now, I'm not counting defense and I'm not counting automotive. This is just durable goods outside of those two. But this sharp increase was the sharpest ever. And then it's been flat for a good year, year and a half, very flat. Not down really, just flat. When these durable goods orders start picking up again, and they will at some point, there is a point in time when people are going to go, I really got to go get that washer dryer. When those things start happening, then this number should start to pick up. It's really going to help manufacturing, which, as you know, has been really pounded down. So watch for that number. Watch for those durable good numbers. Okay, and then, I'm sorry, that was the overall durable goods number, is what is showing down 0.5%. Durable goods minus transportation, they're not giving us that number. Last month, it was up 0.6%. And then that's what we've got so far. All right, then we got the Case-Shiller Home Price Index. They also are not going to give a guess on that one. Last month, it was up 5.4. Now, that's not month over month. That's a year over year number. So right now, the Home Price Index for 20 cities was up 5.4 year over year. I'm going to guess that that's still going to be up in that same ballpark. They're not giving us a guess, but based on everything I'm seeing, prices are not coming down on homes in these 20 major cities or anywhere. Few places, a couple of places are seeing some downward pressure, but hardly any place. Most places are seeing upward pressure. All right, then we got the Consumer Confidence Index that comes out at 10 o'clock on Tuesday. So we'll report that Tuesday night with yeah, okay. We'll report that Tuesday night. That's 115 is what they're expecting compared to 114.8 last month. So a slight uptick in consumer confidence is what they're expecting as jobs remain plentiful. Yeah, I think that's Yeah, as good a guess. I guess I couldn't guess any better than that. All right, then on February 28th, we have the GDP first revision. This is on Wednesday. They're saying no revision at all. They're speculating it'll be right at 3.3. Um, that would be that would only be surprising because almost never do we see no revision. So I have no way to guess if it could be revised up or down. I don't have any special information on that one. Then we have advanced U.S. trade balance in goods. No, they don't have a projection on that one. Advanced retail inventory and advanced wholesale inventories, no projections on those. Now, the wholesale retail inventories were up 0.4% last month. Wholesale inventories were up 0.7%. That's not what you would kind of expect in this environment. So we might be looking at some downward pressure on those in January. Then we've got Fed speakers starting on Wednesday. Raphael Bostic speaks on Wednesday. That is always great. Then we've got Thursday. We start off with initial jobless claims. I'm telling you right now, that when they give a projection on this one, I'm just saying they're just guessing. They're throwing a dart at the wall because they've been so far off the last 10 weeks. Every week is completely wrong. So anyway, last week we were at 201,000. They're saying it'll pop back up to around 206, but I'd be doing the same thing, throwing that same dart. Then we start off with personal income. They're saying that'll remain the same. It jumped 0.3% last month. That would be fine. That would be probably exactly what the Fed would like to see. Personal spending nominal, that they're only expecting to go up 0.1% after going up 0.7% last month. So that would be maybe an averaging or not so much less nominal spending, but rather an actual kind of a balancing out of the high jump last month. Then we've got the PCE index. Okay, here's where it's going to get scary if they're right. So remember, these are economists that they're polling and asking them their opinion about what's going to happen this week. So the PCE index last month was only up 0.2%. Fed loved it. Last 3 months, 5 months, 6 months, Fed loved it. Good numbers for the 6-month period. And that's why 6 months, actually, I think maybe 7 months now, it's been good. That's why people are starting to think the Fed would be ready to cut rates in March. They're now saying that these economists that have been polled are saying it's going to be up 0.3% on the regular headline PCE number. That would not be good. That would be a continuation of what the Consumer Products Price Index showed a week and a half ago. Then you've got the core PCE index. They're showing that up 0.4% compared to 0.2% last time. This would be worse because these are going to be showing more of the consumer products, without taking into consideration food and energy. So this would be just like consumerables and services. There's one item that people are talking about a lot, and maybe you're aware of, maybe you're not, is that auto insurance prices are going up radically. I could do an entire video on that sometime. There's reasons for it, and the reasons aren't expected to maintain. So, and that has been a big piece of why the numbers have been going up. So just something to pay attention to. All right, then we got the year over year. It was 2.6% last month. They're saying that'll be down. This is headline 2.4. So that's actually reducing even as we have this 1 month maybe blip, but actually the overall year over year down to 2.4. That should be well within the expectations of the Fed. And then core dropping from 2.9 to 2.8. Again, year over year, that should be very good news to the Fed. We'll see if these numbers come in at these levels. I think if those month-over-month numbers come in at those levels, it would be very bad for the stock market. Maybe it's already priced in, but we'll see because the market is, it's at all-time highs. All right, then we got Chicago Business Barometer. This is purchasing managers again. This is last month was 40. It was at 46, and the projection is that it'll jump to 47.3. Pending home sales was up 8.3% last month, suggesting it will continue to bounce, but this time only up 1.5%. We'll see how all that works out. Then a bunch of Fed speakers on Thursday, and then Friday. We've got the Manufacturing Purchasing Managers Index final. No guess on that one. It was 51.5 last time. We've got the ISM Manufacturing. It was 49.1. They're saying that'll pop up a little bit. manufacturing numbers you're starting to see a couple of the manufacturing numbers barely squeaking up. And maybe it will, maybe it won't. This is what they're projecting. Construction spending was up 0.9% last month. A lot of that is government. They're expecting construction spending to be up another 0.2% this month. Again, that would be a pretty soft number to be up 0.2%. Consumer sentiment final. This is a 79.6 last time they projected, and this time they're saying this will be corrected to 79.8. So it's a positive direction, but still a fairly low number for consumer confidence. And then a whole bunch more Fed speakers, which is never great, right? Okay, let's take a look at where the markets are right now. And we will start off here, as we always do, with the bonds, because in my opinion, the bonds are still driving it. So we have the 10-year down just a little over 1 basis point, 1.2 basis points at 4.248. You've got the 2-year unchanged. So once again, that's widening the inversion. You've got the 2-month up to widening that inversion as well. So right now you're looking at the 10-year coming down, which is good, but the inversion widening, which is shocking, surprising. The only explanation we've been able to get for that is the way the Treasury auctions are being loaded up with the short terms and not as many long terms being offered. So, all right, let's go on to oil. Oil is down barely, a few cents, sitting at 76.46. That would be right at the high end of the range. It jumped up to 48, but it's dropped back down into that range where we had for a while. So that's good. We've got natural gas up 5.86% in the pre-market, back up to 169. Again, this is very, very low for natural gas, but at least it's bouncing up a little bit off of those very, very low lows. The dollar index, it says it fell for the first time last week. What will happen this week? There is very hard to tell by the pre-market here. It's absolutely flat. You've got gold down a little bit, but still sitting at 2,043, dead center in the range that it's been for months now. Or yeah, I think it might have been below 2,000 for a minute, but it's basically been 2,002 to 2,080, 2,090 for a very long time. Copper down a little bit this morning, 0.35 this morning. Okay, this evening. Then you've got the Bitcoin up 193 at 51,709, very close to the 52, which is kind of where it's been. But people are saying it needs to get to 53 to break out. I don't know anything about it. Okay, then on the equities, we've got the Dow down 12 or 0.03%, S&P down 1.75 or 0.03, and the NASDAQ down 7.25 or down 0.04. You could say, I could have just shortened that and said they're all flat. There's like nothing to help us in terms of what might be going to happen tomorrow morning. All right, so what might be going to happen tomorrow morning? The PCE doesn't happen until Thursday. While I think the markets will be impacted by thinking about what the PCE is going to do, so you might see some moves in the bonds, you might see some moves in the equities because of anticipating what's going to happen there. You have a few earnings reports coming out this week, but nothing. We got Zoom and Lowe's and a couple, but nothing that's really going to get the market moving one way or the other. So a little hard to call. Tesla. They had a lot of good news over the last 3 or 4 days, a lot of good reporting. Wall Street Journal, a lot of actual mainstream media finally talking about the Cybertruck. So, it could be that we'd start to see it inching back up, starting to make more moves towards that 200 level and maybe breaking through again. And maybe this time it'll continue on. So I don't see any really negative stuff, at least right now, on Tesla that would drag it down more than it was dragged down last week. All right. Well, you know what? That's all I got for you right now. I would like you, of course, did a recent video this morning with John McElroy over at AutoLine, and he was discussing the end of the Ice Age, some amazing stats showing the huge declines in business for GM, for Ford, for Volkswagen already. I mean, these are mega 33% declines, 30% declines. hundreds, millions of cars for Volkswagen, a million cars for Volkswagen. I mean, it's big declines in terms of their overall sales coming into 2024 over the last decade. And he talks about what that portends. What those companies should be a little nervous about are people that are holding their stocks, which are already not in great shape. All right, that's if that card will be right here. Watch out for Brian White tomorrow around my noon hour and Larry Goldberg later in the day after the market closes. And then, you know what? As always, it has been great talking to you.